Hi, this is Merrill, a tax tutor. In this video, I wanted to talk about a question that I get very, very often. And that question is, what can I deduct on my tax return? What is a deductible expense? What expenses have I incurred that I can now deduct as a business expense? And for that, it's really hard to come up with a list of everything somebody can deduct, because that may vary depending on situations. So the IRS definition of what a deductible expense is it falls under two things. It's both ordinary and necessary. So ordinary and necessary. So what does that mean? So ordinary means it's something that is common and accepted in a particular industry. Necessary is something that's helpful and appropriate for a particular trade or business, even if it's not indispensable. So let's talk about this a little bit. That's the actual definition of what it is. But how does that practically apply in business? So let me give some examples here. So I had a client that was audited by the IRS. That client went to the store, went to Walmart, and they had purchased kitty litter. Was an expense. So the IRS audited them. They said, hey, you went to Walmart, show us the receipt. We gave them the receipt. The receipt had kitty litter on it. And the IRS looked at it and said, kitty litter, that is clearly a personal expense, disallowed. And we said, well, wait a minute. We went back to the client, we talked to him and said, oh, the IRS doesn't think your kitty litter is deductible. You know, what's the story behind that? Why'd you put kitty litter? And he says, oh, that was a business expense. He said, we own a mechanic shop, mechanic shop. And when oil gets spilled on the ground, we use kitty litter to soak up that oil so that it's not lying on the ground anymore. Kitty litter is a great way to soak up oil. And so we went back to the IRS and we said, hey, you know what, this client, they use that for business. It was for soaking up oil. The owner of the business doesn't even own a cat. The only reason why he buys kitty litter is for the oil purposes. And in that case, the IRS auditor says, oh, okay, I understand that is a deductible business expense. Now me, as a CPA preparing tax returns, can I go buy kitty litter? Well, I hope I don't have oil all over the floor of my office. So for me, no, I can't really go buy kitty litter. That's not going to be a business expense. So that's where we run into problems saying, here's a list of things you can deduct and you cannot deduct, because every business could be different. Another example, this wasn't a client, but I happened to be in the IRS offices in downtown Salt Lake City for an audit of a client. This one was an in-the-office audit. So I'm sitting there in this audit, and there's this IRS audit manager who is being kind of loud and talking really loud. And he was talking to another IRS agent in this office and telling him the story of this client. It was a great story. I was glad I happened to be there at the moment to hear this. So he started telling this other IRS agent that he was auditing this guy, and he had gone and deducted a gun. He was going through his records, and there it was, a gun that he had bought and deducted. And the manager said, aha, you can't deduct a gun, that's an add back, you owe tax on that. And then he said, but then the taxpayer said, well, wait a second, I work in construction, and I go out to construction sites early in the morning, and sometimes there's people that move into our construction areas, and they need a little bit of motivation to leave so we can get our work done. Or they could be hostile, or they could be angry, or a number of other things, and I need that gun for protection, for a way to keep myself safe. Now, I'm not saying every construction person can go out and buy a gun, but this IRS auditor, this IRS manager in the IRS office, he personally thought that that was a valid business deduction and allowed that person to deduct a gun as a business expense. Again, I'm not saying that would work for everyone. You could run into a different IRS manager that thinks completely differently, but at that moment, at that time, for that person, for that situation, that person felt it was appropriate and fine to do. So again, that's why it's hard to get into rules So we look at things like, okay, is this an expense you would have if you didn't have the business? Some of those are easy. There's business licensing that you're going to need to have. There's setting up business entities. There could be insurance for your business. You might have to rent out a space for your business. Those are really simple, obvious things that you would not have an expense if you did not have that business. Then you run into other things that are helpful for your business. Your cell phone could be a business deduction if you use your cell phone for business. Going out to dinner with a spouse or a business partner could be a business deduction if you meet the qualifications for business purposes. There's a number of things out there that could be opened up for those business purposes, but you just have to be careful with them. Make sure it's an ordinary and necessary. And when we talk about that, sometimes you have expenses for your business that aren't necessarily necessary, right? Like advertising is not necessarily a needed business expense. It's helpful to grow your business, but it might not necessarily be necessary to maintain your business. Here with my CPA practice, we get a lot of referrals, a lot of people coming in. I don't have to actively go and market and pay money for advertising for my CPA business because we get referrals coming in. So for us, that's not an expense we need, but it's ordinarily takes place in accounting firms and in other businesses around the country. It's an ordinary expense that most people have, and so the IRS sees that. Now, you can't take this to an extreme. Some people say, in order for me to make money, I have to be alive, and in order for me to be alive, I have to eat. Therefore, all the groceries I buy are a business expense and related. That doesn't work that way. That stretches it a little too far. It needs to be directly related to your business in some way. So hopefully that's helpful. That's a guide on what you can and may not be able to deduct in your business. Again, it's very personal. It's very specific to that business, but hopefully that's helpful. And look forward to talking to you more in some of our upcoming videos.